Hey everybody, welcome back to our series of how to use yin-yang indicators. Today we are covering yin-yang volume. So as you can likely already see, we'll just zoom in on the bigger volume candles here. Our volume looks a lot different than normal, which will pop up here just so you can see that. Normally with volume, and why the main reason we decided to make this, is that it can be confusing to read. You see, for instance, both of these volume sticks right here. And you're like, oh, that's very similar amounts of volume. Well, it's not really. You think they're both by volume because it's green. Well, the only thing that makes these green or red is, did it close less than or more than where it opened? So if this bar is red, the volume's red. If this bar is green, the volume's green, and so on and so forth. Well, that can be a little bit confusing. So as you can see here, if we look at ours, this first big green bar here is for volume 1. It had a lot of buy volume, very low sell volume. But on the second one, that is actually a bigger green bar, which you'd assume had more buy volume, actually has less. And in that bar, there was more sell volume than buy volume. So it can be confusing to try to decipher volume, and volume is so important. I feel like it's a very misunderstood indicator that most people just don't either know how to use or they just don't use it all. And that is a poor mistake that a lot of people make because volume plays more of a factor in price movement than almost anything else. Like, a price could move $1,000, but if there was no volume, it didn't really mean anything. Whereas if the price moved 100, but there was a ton of volume, that means a lot more for trading wise than high price movement with low volume. So, and I know a lot of people might be wondering, why is the volume so low right now? Just in a general standpoint, not this indicator, but what happened here? Well, everyone was buying all through here. They didn't know where the bottom was going to be. The second we hit 15,000, most people realized, okay, we hit bottom. The reason why is that the cost of mining is about 17,000 US dollars per Bitcoin right now, and it's pretty hard to go less than the cost of mining, especially for a long-term standpoint. So once it was around 17,000, everyone accumulated. This was people buying and selling for fear of miss of opportunity. People realized that, hey, it's too overvalued. A lot of people sold off, and then some people bought back in. A lot of people that sold off here rebought back in here again, and now they've just been sitting because they're like, this is too overvalued to buy at, but I also don't want to sell because I don't see it coming back to as low as where I initially bought. So they're just holding it. So that's why you got these tiny little bars down here. But if we zoom in, they still look big. So let's hide the regular volume for a second, and let's discuss this. So it's very important to know how much of each volume is in what, because one, it dictates momentum, and it dictates trends changing. And personally, my favorite thing, yes, I love seeing how much buy and sell volume is, but my favorite is the buy and the sell moving averages. So this white line represents the buy volume moving average, and this yellow line, or this orange, yellow, it's somewhere in between, it represents the sells moving average. So it's a very strong indicator of when momentum changes and how many people are likely doing market orders for either buy or sell. So, and market orders are generally what's going to cause big wicks like this and this, where it's people either panic selling or fear miss of opportunity, and they're like, I don't care what I get for this, I need to sell it right now. Or vice versa, I don't care what I need to pay for this, I need to buy it right now. And it basically just gets ordered and pushed through immediately. You're guaranteed for that to go through, but you don't necessarily know what you're going to get for it. And it generally drives the price either down or up really quickly. Whereas when you see a lot of horizontal movement, it's usually low market orders and lots of limit orders. People have strategically placed the price where they either want to buy or sell at, and it's not filled until it hits that price. So what happens when the buy and the sell volume cross? Well, just to see a better example, we're going to go over here. Just because there's so little price movement going on here, it's so, well, we had some price movement, but so little volume movement that these volumes they're not moving too much. And it's not fun to look at stuff that's not moving too much. So if we look here, the buy volume crossed over the sell volume on December 29th. And it maintained above it until February 3rd. And you can see it was a straight pump pretty much. And then the second it went under right here, it crashed down. We go back above it again for a little bit. And then it crashed back down. And then we're back up above it again right here. That's as early as we can see that the buy volume got more on that first green one there. And then boom. Look how much difference there is. Like, it's one thing, it can be a little scary trying to figure out what to do when they're pretty much sitting on top of each other. That's, I'd be probably just waiting, or I'd be looking at other indicators to get a better understanding of what's going on when you see something like that. When you see these big movements, it's good, but generally what goes up must come back down, and everything corrects. Everything evens out. You're never going to maintain that for too long. So you got to take in factors. But it did cross over right there, and we can see that it maintained that until, sorry, I gotta zoom in a little bit to see here. It went under for like a second right there, which is right here, indicating that there was likely something about to happen bad. I think that was right, yeah, right there. And then the volume's too low that I kind of gotta scroll in here now, just to see what's going on. Yeah, see, it's just kind of, they're just hovering beside each other. There's not too much going on. It's kind of hard to tell when's a good buy. Like, yeah, you could be like, oh, but look, it crossed here. That means it's going to go up. And then look, it did. But yeah, but like, how many times has it crossed around in here with so low volume that it didn't really do much at all? So the point I'm trying to make is that, yes, the price moved up to 32,000 from 25,000 basically, but the volume is just so low that I personally wouldn't have made a trade on this, and nor did I really. I mean, I've been accumulating most dips in here, but I bought my average is sitting around 19,000 right now, so it doesn't really make that much sense to be buying on every little dip around 25,000. I might buy a little bit, but not buying much. Um, and I wouldn't recommend you either. Like, I mean, if you sold everything, or you sold a vast majority of it near 30,000, then yeah, maybe coming down here it makes sense. But it's a little risky in my opinion to be trading when the volume's so low. Unless you know the underlying factors, which is that everyone basically purchased already, and not many people want to sell. They're like, hey, we got the halving coming in April of next year of 2024. It's going to effectively drive the cost of mining up to around 30 to 35,000 US dollars per Bitcoin. And if you look into the halving cycles, it's for the first 300 to 900 days was one of them. It's just a pure bull run after every halving cycle. So a lot of people are projecting we're going to see a new all-time high around somewhere in quarter 3 to quarter 4 of 2024. A lot of people are projecting we're going to see 100,000 in 2025. I mean, I think anything's possible, and if you're just going on historical, not really price movements, but more of like a vertical trend line almost for how it's been moving and almost ping-ponging through halving cycles, it does project around, I want to say like somewhere between like end of quarter 1 to quarter 2 of 2025. We should be seeing around 100,000. And some are even saying we could be seeing 300,000 by the end of this bull run. But just keep in mind, no matter what happens, there's usually around a 40 to 70% correction during the bear run that follows the bull run. And then we got the reaccumulation phase, and then it just, keeps rinsing and repeating every 4 years. And that's Bitcoin for you. There's other factors that are going to affect things, but that's pretty much Bitcoin. Sorry, back to that, off that tangent, back to the volume indicator. You can change what affects these moving average lines for the buy and the sell. Um, and you can decide the length, whether it's volume weighted moving average, exponential moving average, or slow moving average, or some people call it like standard moving average, whatever you want to call it. It doesn't move exponential. Basically, volume takes into account if price moves a lot when there's a lot of volume, it affects the moving average more. Exponential moving average means if the price moves a lot more than it normally moved, that specific bar affects the moving average more. And then slow moving average isn't affected by volume or exponential price movement and just kind of moves as the price moves. It can be overall the more accurate on the long term, whereas on short term, I think these are the more accurate. And considering we're measuring volume, I think volume weighted is by far the most accurate, but you guys can play around with that. 14's the sweet spot, in my opinion. It's a standard for a lot of different indicators, and I agree that it works quite well. The strength. So this has no play on your lines for your moving averages, but it actually affects your tables over here. So I don't know if you guys have already watched our YinYang B that has these tables showing support crosses and blood diamonds, but basically these are the same things, but they show the buy and the sell percentage on different time frames, so you don't constantly have to keep switching back and forth. And you can modify these to whatever you want, so you don't have to, you know, constantly be changing back and forth, whatnot. Whatever you want to look at, you can just easily plop that in there. You want to see what's happened on the 1 minute, even, you can easily see all that data. So, and 1 minute honestly might not be a bad idea. Maybe I'll set that as one of the defaults, just because you can kind of see what's happening really instantly and how people are feeling like in this moment. And as you can see, it will change pretty quickly too, because it's all the 1 minute. Yeah, so these can be very useful just for seeing like how many people are buying and selling on different time frames, and that type of stuff. Like the 1 week, for instance, overall, it's been more of a sell. A lot more people have been selling over the week, whereas it's been kind of neutral in the last day. And you can see as of recently, we're having more buy than we are sell. And this does make sense, just because of how much of how much negative bearish movement we had here. That it's likely they're trying to correct a little bit, probably more into 30% range, or even maybe about here, yeah, 30%. This is probably where it's going to try to get to next, as this looks like a strong resistance location right about there. So yeah, that makes sense that we're seeing some more buy volume. So back to this. So these are defined based on like the amount it moves is based on how strong you want it, and basically strength. It takes into a few things into account, but the most simplistic thing I can say for what it takes into account is how far of a look back is it going to use. It does more than that, but we'll just say that's what it is. So glass, let's just assume it doesn't look back that far. So maybe it's just averaging it over the last, I don't know, I'm not going to say specifics, but let's say it's averaging it over the last 10 candles. Whereas unbreakable, maybe it's averaging it over the last 1,000 candles. And for each time frame, so that'd be like, say, 10 candles on the 1 minute, versus 1,000 candles on the 1 minute, and then vice versa for a week. So that'd be like 1,000 candles on the week, or 1,000 candles on, or 10 candles on the week. So it will drastically affect your stuff, as you can see. For the 1 minute, we got 61 and 39, and when we change it, we got 56 and 44. So it will affect. And whatever you deem is your trading style, is it more important to see stuff that is happening really quickly and what's affecting it in that like second, or is it more important to see over a longer time span. Average, let's just pretend it's say like 250. Sorry, I don't want to get into exact specifics on how everything's calculated, but yeah, so average takes in a long enough time span, in our opinion, that it is likely the best one to use with 14 length, and like once again, this length doesn't affect the tables; it affects your moving average lines on top of there. So we can see if we change it to say like 10, we're going to see a little bit of different lines coming up there. And even, let's go back to 14 for a second, and let's change it to exponential moving average. Once again, you can see it changes stuff. So it's up to you to find what works for you, because I've always felt, and we've always felt, that not one thing is the right way to trade. The key is to find tools that you can tweak to allow you to trade the way you want to trade in the way that works best for you. So we're just here to provide you tools, teach you how to use those tools, kind of teach you some tips and tricks, and tell you kind of, most of our tools, the default settings are tailored to what we deem is best, but in no way, shape, or form does that mean you need to use it that way. So I think we will conclude our YinYang Volume tutorial video here. If you wish to purchase our indicators, a link to our website is in the description below, along with a coupon you can use at checkout for 5% off. Also, make sure to join our Discord if you haven't already, as affiliates advertise their affiliate codes in there, which you can use to get another 5% off your purchase price. And like always, if you have any questions, ask us in our Discord or make a support ticket on our website, and you can even ask us in our YouTube comments, as we'll answer there too. Okay, awesome. Thank you guys for watching. Have yourself a great day, and happy trading.